Welcome to the Quant Room, the stories behind the data.
What's going on, YouTube? What's going on, everyone? This is our new series with Spikeet. It's called Quant Room. We're going to get the stories behind the data, and we're really just going to try to provide you some more information about systematic trading. And today we have our first guest, a very special guest. His name is Niv, and he's joined us today. We're going to talk about his background, his story, how he trades, and just a couple of things to help you guys if you're looking to become systematic. So without further ado, Niv, my first question for you is, you call yourself Hacker Trader. I was curious, why is that like your Twitter handle?
That was a very long time ago. I don't really know what was in my head back then. I just had a vague idea that I would like to combine coding with trading. Didn't know exactly how it's going to happen. And this is where the handle came from. But no hacking on my side. Like no real hacking.
Okay. Gotcha. Yeah. We don't want to incriminate you anyways, but so yeah, no hacking. So I was just curious about the name. So yeah, just tell me a little bit about your journey, how'd you got started, and what kind of got you into the more systematic background.
So I got a bug of trading like when I was very, very young. I guess I started officially when I was 16. I got no idea why, just something that was always in my head as a young kid, just watching like charts and stuff like that. It's something that I always wanted to do. I didn't even know what it means. So I started learning when I was 16. I went with my father to learn technical analysis in some small college in Israel.
Really?
I left it aside a few years. And I really got back to it when I was 21. I went to Singapore to learn like currency trading.
Okay.
Again, something with my father, some connections he had. Did it for like 2 to 3 years, started trading. At some point there, I learned some profitable, nice strategies. At some point, I understood that I have to started coding because at some point I had to pay someone to do some coding for me. And like every bug, every small little thing, it used to cost a lot more money. And I said, okay, it's enough. I want to be able to do it myself. I went back to Israel, started to learn computer science in a university. Graduated. And from that moment onwards, I basically started to like backtesting my own things. I was also a market maker in a crypto company, Quant. I did it for a year. I did some more little things with like arbitrage in both crypto and online media. I had a small company that done well in this field. And that's it. From there, like I learned about small caps. It seemed to be like the easiest thing to find edge on. So this is where I started. It took me way too long than I expected to even start in some light. Yeah. Even though you see like very nice curves in the backtest, like the path to make it a reality is a pretty tough one.
Yes. So I don't want you to talk about that too much yet. We're gonna get into that because that's definitely something I think many of us have experienced, is that growth. But I guess to go off of what you just said there, so you started relatively young. Where were you, I guess, like born? Like what was I guess like your childhood, like what was your dad doing? You said your dad was obviously, you would say maybe a big influence for you. What was that like? Was your dad like kind of was he big into trading? Was he a successful trader? You got a lot of knowledge from him? What was that like?
Yeah, so I think we started together to actually learn it.
Oh, okay.
It was like
That's
something
very
that
cool.
we both, yeah. He had his own path. He's been a successful trader for a couple of years.
Okay.
He took an account. I don't remember the numbers, but it took an account to something pretty substantial, and then basically lost it all due to like a broker running away with the money.
Right,
Uh,
right. Yeah.
so there
Oh, the
was a
broker
broker.
ran away with the
Yeah,
money?
yeah, 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 yeah.
Really?
Yeah, it was
Wow. So it
pretty
wasn't even like the
intoxicating.
common blow up that everyone experienced. It's just like, wow,
No, no,
that's
no.
very unique. Wow, is that so was he able to like I guess ever regrow or
So not really. It did like for the past couple of like let's say a year maybe. It did started to short small caps.
okay.
You can see like in his info is doing
Okay.
pretty well, but
It's
I
a
mean
similar
pretty well
strategy
in
to
terms
you,
of
huh?
sorry.
I said similar strategy to you now, huh?
Yeah, something basic. Yeah, something basic
Okay.
that I use. It's pretty consistent. It's kind of cool. But he wasn't able to really reach the levels that he was where before the broker took his money.
Yeah, that's very unfortunate. That's a very sad story right there. I couldn't imagine because like the trading journey is very hard, and then like for me, I mean I've like doubled, tripled my account before, and then split my account in half in the next 4 months, stuff like that. I've done that multiple times, and it's a very bad feeling. So, but at least when it happens, like it's your own doing. Like you blew up the account, like you can feel I don't know, like I feel responsible for it. So it's like, okay, I'm played the game. I won, I lost, we all go through it. But to have someone take it away from you, I couldn't even imagine how I would feel. So my first question here is you seems like you've probably been systematic for a very long time, or this has always been your focus. Or have you ever like deviated from that and done more like, I'm pretty sure you always systematic testing your own stuff, but have you ever really I guess what they call like vibe traded or did the discretionary thing?
Um, not really, not at scale, not something that was consistent enough to even mention. Like small random gambles, I think, like everyone else, but
Yeah,
nothing really.
just itching to scratch the nerve of the gambler in
Yeah,
you.
yeah, yeah,
Yeah,
yeah.
I've definitely done that on large scales too. So yeah, I think okay, so cool. You kind of always had that mindset of that you was systematic, and that's kind of always been approach. What makes you, I guess, never really stepped into the discretionary field? Was it anything, or was you just kind of always found success in the systematic approach? So you was just like, I don't really need this. Like, what keeps you away, or what turns your interest away from it?
I think it's very difficult for me to trade anything that I cannot prove, and I cannot hold a position that is like meaningful, and be able to lose large amount of money on something that I cannot prove that works, on something that I don't have any history of. Um, and on the other hand, I was never a guy to just sit down and like try to manually think what I would do on a chart. So
Mm-hmm.
I couldn't really like prove anything manual or discretionary.
Mm-hmm.
So I couldn't gain the confidence to do it. So it was just like not for me. I couldn't convince myself to take any real risk on something that is discretionary. I'm a math
I
guy. I like to prove things.
Okay, yeah, you did. You said you got into computer science at sound like a pretty early age there too. So, um, I have an engineering background. I'm very, I'm definitely a degen gambler at times in heart, but I'm very risk reward based as a person in general. I love to take risks. I absolutely love it. That's why I love trading. But I also love to prove that my risk has some type of upside to it. Right? There's some type of existential reward compared to the risk that I'm taking. And that's kind of how like my brain works. Now, for you, in your style of trading, I mean, it sounds like, you can't really trust the vibe trading. That's just not your thing. You can't really get behind it. You can't really put the money behind it even for it to be worthwhile. Is this like a part of a personality trait for you? Is this kind of like how you are in life, or this is just like a trading thing for you?
I think I'm a pretty cautious guy in everything in life as well.
Okay.
It takes me time to take risk. takes me a lot of time. It takes me a lot of proving to do. It takes me a lot of thinking. It's not
Okay.
necessarily a good thing. I guess I would win a lot more in life if I took bigger decisions from my gut and not from my brain all the time.
Mm-hmm.
But essentially,
Probably
yeah,
take bigger losses too.
yeah. But somehow things I've done tend to work out eventually.
Mm-hmm.
But I always done it like on a pretty small scale.
Okay.
So I was always like almost good enough, like
That's I
almost made
would
enough money.
Yeah, I would say that is kind of what I tell people too. Like I've done a lot of stuff. I've been good at a lot of stuff. I've been fortunate enough to do a lot of stuff and make money at it. I played. I was a semi-pro gamer. I can never make it to the big leagues. Never good enough to get it done. But I was able to get sponsored and get paid to do it. I was a D1 athlete. I've been able to get good jobs. I was always able to breach the level above average, never able to breach the level of being, I guess you would say, good or great. So that's kind of, not to, play down on myself. I do think I'm a rather unique, amazing individual, but at the same time, like, there's definitely, I've seen performance of other people's and I'm like, wow, they're top tier. Like, that's the goal, is to get there. I've never been able to get there at anything, but I always been good at almost everything I did. So I can definitely relate to that story. I would say, and I don't want to make this about me too much, but I would say, like, I try to take huge leaps as much as possible. I'm definitely not a step by step person. I'm probably not the most cautious person. I always believed in myself to a fault, to where like I'm able to make a huge mistake and I would say I'll get it back. You know, I'll just always say I'll get it back. So speaking more of your personality, what do you think? You think you're? It sounds like you're very disciplined and cautious. And
I would say
what?
that, yeah.
Yeah. So what do you? Let's just stay here on discipline for a second. I think personally, especially in the field that we are doing, when we're backtesting, we're doing quantitative approaches to the market, trying to pretty much beat the market with math and not our gut feeling or, more brainier approach, right? What characteristics do you think, when that market hits and you're running your system, what do you think really is an important characteristics?
Trying to be a systematic trader specifically, not
Yeah.
trading in general.
Yeah.
Um, I can tell you from my own experience, things I've done like bad at the beginning. First of all, there's the overfitting, of
Yeah.
course, and the chasing dreams that are not there. Um, so overfitting, fitting the data to tell the story you wanted to tell, and not what's really there. There are so many mistakes in quant, like so many things you can do wrong.
Mm-hmm.
Um, I would say the most important thing is to basically, whenever you develop something, just watch it work forward, like forward testing,
Yeah. Forward testing.
and
Yep.
see if your signals are the exact same thing as what's happening in the market.
Mm-hmm.
Um, and just early on, watch your actual trades and not the excels.
Yeah.
That's something that got me very delayed my progress. Just focusing too much on the excel for months, even before I know it's actually legit. It's actually like providing the same live stats that the excel does. So I would say, like, for quants, don't waste your time. Mainly, don't waste a lot of time on the Excel sheets, and be more in the market itself. It will
Yeah.
speed up the progress, I think.
Yeah. I think that's a very good lesson. I have a group and we do a lot of back testing together and looking for strategies together. I think the goal is one day to get enough, algos that we can get some money back and get some investments and then kind of like run a fund. So I want to move on to, talk some about your strategies and the philosophies. And the first thing I really want to talk about here is you called yourself a Degen systematic trader. Now, please explain to me what is Degen trading, and also how do you go about it systematically?
So I came from, as I said, market making crypto,
Mm-hmm.
and then I spent some time in a family office. And the goal there is basically, the top returns you're looking for are, let's say, 50% tops, like. But usually, you aim for 20, 30%. In crypto market making, it was like 10%, let's say, on average, with very limited drawdowns.
Mm-hmm.
Now, when I left this semi-professional field,
Yeah.
I need enough money to actually live with a 30% return. So to me, systematic degen trading is basically making 100% to aiming for at least 100 or 200% returns
Yeah.
with the same amount of drawdown. Let's say 10 to 20% drawdown, max
Oh,
drawdown.
wow.
And the reason is it's practical. I don't have enough money to live off a 10% return. I
Yeah.
have to be degen in some way. At least if I don't manage other people money and aiming for, like, let's say 30%, and all good, I can live off of it. But
Right.
for now, for the stage I'm at in my life, I need to aim for large returns. It comes with risk, but it's a must for me right now.
Yeah. Understood. I feel the same way. I actually just, I just got a new job. Like I told you, earlier before we hit record, um, I was trading full time for 5 months. And, during that 5 months, I did relatively well. But the thing was that it was going to be a setback no matter what I did, because I just don't have enough money in my account, So I have to pay my bills. I have expenses. After that 5 months, the money started to dwindle. It was looking like I was going to have to pull from my account, which is just a negative, right? Like life can't be the reason you're pulling from your account. The whole purpose is to grow your account. So like you said, you can start living off that 10-15% return and have a good life off of it. So if you're pulling from it, you're doing the opposite, right? So I would say I do a decent amount of degen trading myself, but we don't need to talk about my strategy. But I'm also like most of us, I'm also in the small cap field, trading small caps, trading small cap gappers. I take them long, but it's
Wow.
on very specific conditions. Yeah, I know. It's on very specific conditions, and it's a very interesting strategy that we can probably get into a little bit later. So, with that degen trading, right? What type of, I guess, strategies? I mean, obviously you're doing small caps. I've seen you mention crypto before. What is the, I guess, the portfolio looking like on, a monthly basis? Like what is kind of like your stuff that you're getting into trading? How many trades are you taking?
Okay, so let's build it. The most basic thing I do, and I don't really talk about it on Twitter and stuff. I'm just trend following crypto since 2017.
Oh, wow.
I was a big believer in crypto.
Mm-hmm.
And I have like the most simple strategy in the world, just following the trend, mainly in Bitcoin, sometimes in ETH or any other coin that have some relative strength.
Yeah.
So this is something I've done like for years now, since 2017, and it's paid the bills. Basically, it's a very simple stuff. Large drawdowns at times, but I was able to hold the drawdown just because I'm a big believer in crypto.
Okay.
I used to be at least a very big believer, and I built that account. So this is something I do. Um, I've done small caps for the past, let's say, I don't know, maybe 2 years or 3 years now. I took an account from 30K to 110K in let's say a year or so.
Wow.
And then it got down to 80K after the SPRB loss. I don't know if you know the ticker, but basically SPRB changed a lot of things for me right now. We can get into it, but basically it was a huge loss. It was like 20K
Oh
loss
wow.
in a day. And
Jeez.
so I had, before that loss, I had like 3 strategies running on small caps. Everything is
Mm-hmm.
automatic.
Mm-hmm.
And after the loss, I had to retire 2 strategies. And right now I'm working on maybe getting a new strategy in, or just completely deviate to another field. So this is like where I'm at right now. So let's say I have one small cap strategy that is running right now live, and I do options,
Yep.
SPX options. We can get into it as well, but it's not profitable at the moment. I mean, maybe it's break even, but I don't have enough like track record to say anything interesting
Right.
about it. I've
Right.
just done
Gotcha.
the research, and I kind of believe it could work out eventually.
Okay. So, just taking a step to talk about what you just said here, right? So, you took a big loss, right? And I think a 20K loss when you have 110K account, that's a pretty substantial amount of money, just in life in general, and but also just a percentage of the count. Um, I have definitely taken a huge loss before, maybe like 15-16% of my account on a gap down or something like that. I've definitely blown up an option or two before and lost like 20% when I had like a 2K account just trading options with it, trying to learn them. Um, let's just talk about the mental aspect of that. Like, where does that put you at?
So before that loss, I was kind of on top of the world.
Yeah, yeah,
I just finished building my algo like a
yeah,
month before, and I was traveling with my wife and kids in Portugal. We did a month there, and like everything worked perfectly. I made like
yeah,
31K a month. It was a record month. Everything
yeah.
algo, I didn't touch it. I was traveling all day long. Like I barely watched my phone. And and then it came. So mentally it was, at that moment it was okay. I was like, okay, I know what happened. I always put that in the back of my head as a scenario that might
Mm-hmm.
happen. What really got me there was like a very tight stop. Okay, so basically 3 of my signals fired on SPRB, and one of them had a very tight stop. So
Oh,
once we had that huge skip, I had like I think it was, instead of risking like 20% on one of the positions, I risked like 200%. I don't remember what was it, but it was huge. Um, so tight stop in small caps is
yeah. They can get
maybe not something you really want to do, because
they can get blown up
um,
sometimes. Yep.
yeah, and actually I think it was the first time in my backtest that something like that happened. But after that, like there's no going back. It's something that happened now in the data. The max drawdown is now like more than 2x of what I planned. And it basically means for me that 2 of my strategies are gone, essentially. So mental, it was tough because I started to see like a brighter future for myself.
Yeah, yeah,
It was very easy for me to see how my 100K are going to a million in a bit. So that's like was a pretty devastating feeling in that aspect. But on a more like rational aspect, okay, now I have 2 strategies retired. I have one left. I need to find some more to complement. and to bump my projected annual returns back up. And I try to take that as a positive thing, like taking some chips off the table of the small caps world, where the risk of ruin is is
Yeah.
there, and taking some off to something that is more, let's say, less degen.
Yeah, yeah, definitely. So I noticed that you had wrote that systematic became problematic. Is this what that was referring to?
No, that was a small, like a hint on another guy on Twitter that got
Okay,
famous
gotcha.
from being systematic, and I don't think he's that systematic anymore, although he claims he is. So
Yeah,
it was
yeah,
just not that funny.
yeah. Gotcha. So you talked about you have a kind of a trend trading strategy for crypto, and then
Yeah.
you have some type of signal strategy for you had three of them, two retired, but you still have one that's kind of for in the small cap, the degen world where obviously you take on more risk. Is now you mentioned that you had the algo full running for these three. You cut two. I'm assuming the algo's still running for one. What about the crypto strategy? Is that fully automated too?
No, because that's a pretty like very low latency. I have to make a trade like, let's say, once in sometimes like twice a month, but most of
Okay.
the time, if you catch the trend, then you can go
You can just
months
ride it out.
without
Yeah.
without touching it. And
Yeah.
also one more thing in crypto is that if I would like to if I would like it to be automated, then I need to have all my funds in an exchange. And I'm a big believer in not having your funds in an exchange. So
Yeah, I
I'd
can
rather
understand
do
that.
it manually.
Is that part of the lessons learned from what happened with your dad?
Absolutely. And also the
Yeah.
family office I worked with, they basically have a lot of funds in FTX. And FTX did the exact
Oh,
same thing as the
yeah.
broker did to my
Yeah.
father. So that's a huge lesson. It's also one of the reasons why I don't touch any offshore brokers in the small cap world as well. And I always try to like go with the regulated ones in the US.
Okay. Yeah, that makes a lot of sense. I trade with American, broker over here. Haven't really had any problems. Yeah, I mean, that's kind of why I don't do the shorting road. I had Cobra for a while with Das. Uh, I don't think I have a big enough account yet to kind of play in that field per se. The fees for Cobra mixed with the subscription with Das, it was eating up my account. If you don't have like a real profitable strategy, then you can see the equity curve starts to balance out with the profit that you have. So if I had a big boy account that I can live off of, I would be in the Cobra Dash, kind of shorting small caps. I mean, I have strategies that's proven it can work. I've done the back testing of data. Even had people bring me information to show that it can work. But with the fees that I have currently, it wasn't profitable enough that I was just like, okay, especially with some of the risks that you can see here. Now, what was it? You said the ticker was SPBL. Was that it?
SPRB.
Oh, SPRB. Okay.
Yeah.
Is that when you referred to the MAXI God? Is that one of those
Uh,
tickers?
it's one of those, but that was the Mega Maxi God. It wasn't the regular one.
What's the okay? Gotcha. So you just tell the people about that and why that's like a very real risk and dangerous um, one-off events. As you said, the Omega Maxi God. Try to inform the people of what you exactly mean and why.
So basically what I do is a mean reversion strategy. You have something that goes up a lot,
Mm-hmm.
and you short it,
Yep.
where sometimes when it's still strong, and you have a stop loss, and you're going to win more than you're going to lose.
Yep.
But when you're going to lose, it's going to be a big loss. It's just the nature of having a mean reversion strategy. So you might look at, let's say, 70% win
Yep.
rate with,
Yep.
I don't remember, but let's say 1 to 0.7 risk reward, something like that. even less. So that's the nature of how it is. So it means that you're going to have a lot of small wins when you're trading, and then every once in a while, and sometimes it also comes in clusters, you're going to have a big loss. So if I make, let's say, $500, $500, $800, suddenly I'm going to lose 3K. Okay. It's not a very comfortable trading strategy to run, but this is how it is. This is why it's profitable. Now, so when I refer to the MAXI God, it was just a small joke on Team Sykes that likes to make fun of short sellers when they for their sacrifice when things go wrong for short sellers. But honestly, it's just like, it will happen 20 to 30% of the time. It's just how the strategy works. Now, I have no problem with having a loss, okay? A 3K loss, 4K loss, it's fine. It's part of my stats. But with SPRB, it wasn't a regular maxi that I'm aiming for. It was 5 times or 4 times my regular maxi. I was also at all-time high at my account.
Yeah.
So and I always compound. So combine the fact that I was all-time high. It was the most risk I was able to take in that account. Plus, there was like a 100 or 200% slippage. You get a mega maxi. So it wasn't like a regular thing.
Yeah. So let's talk about like the conditions for this to happen, right? We're talking about like, maybe some news comes, or maybe a pump comes and it gets halted, right? Now you can't get out. You can't liquidate what you're in. You can't get out. And now the things, whether it's flying up or flying down, you're kind of stuck watching it. And if you're on a system, you might not even be watching. You just see when you get out. And then you just have a huge loss. Usually for me, I'm right there watching it, and I'm just kind of just stuck in a moment like, oh man, what the is going on, right? It feels bad, but like you said, it's part of this Degen kind of trading strategy, and it can be very profitable at times. But there's always an inherent risk. I go long on these, so I don't experience it as much, but I would say about honestly, like maybe 1 out of 10, 1 out of 15, I get a gap down that blows past my stop, right? And that's a realistic thing. And that's why I know I can't just put my full account size into it, even if it looks like the most beautiful, perfect setup. And can you give a quick rundown of kind of when you're dealing with the volatility of like small caps and stuff like that?
Basically, the sizing is very important. It's a delicate equilibrium between having enough returns, as we talked about, like having the 100 to 200% per year, and balance that with the risk of ruin, with the fact that the past, not everything that's ever going to happen happened in the past. So my backtest is really nice. If you look at the past, and you can with let's say a 5% risk per position, you will survive and you will thrive, but you don't know what the future holds. And that's the issue. If in the past we had maximum 100% skip over my stop loss, in the future it might even be 500%. So there's a delicate balance there to know like how much you want to do and how much you're actually risking if something crazy is going to happen in the future that never happened before.
Right.
Ideally, I guess you would take like a 1%, maximum 2% risk per position in small cap specifically when you're short. But because I need like to make more money to make a living, I bump it up probably bigger than I should be. But that's just what it is right now, and I'll try to deviate from this strategy in the very near future.
Okay, that makes perfect sense. I can agree with that. I'm not sure what type of Discord she's been in, but I used to be a big part in the QMAGI Discord, right? And in there, we used to have conversations all the time about how much did he really risk when he was growing his account, right? But I think, when you're growing your account, having that initial risk is something that I think helps out a lot. It's very hard to grow your account unless you're just very good and you have a very profitable strategy with like a 0.5% risk, right? So it makes sense that you're upping your size, but usually I'm around 1 to 1.5% of my account, trading.
It's actually different. If I understand correctly, you're doing like long small
Yeah.
caps, which probably
I'm doing
means,
longs. Yeah.
so it's like a trend following, probably a trend following strategy. In that case, I would say the number, like the safe number, would be more like a 0.5% or 0.25%, because you get your
My
like
win rate's
your,
lower. Yeah.
yeah, your win rate should
Yeah.
be a lot lower. If it's 20%, like if it's
Yeah.
a 20%, you can really reduce size. So it's different between like mean reversion and trend following strategies.
Yeah, no, for sure, for sure. I was just saying on my small caps, that's how much I risk.
Yeah.
My trend strategy. I actually have a very interesting trend follower strategy. I also have a crypto one too, as you said. Me and my group have a crypto one, but I have a personal one. That's the only real discretionary setup I trade. But my stats show me that I'm like around 40 to 45%. I pretty much trade themes on news, themes on fundamental news. So example would be like, let's just say you have a pack of stocks that are doing relatively well. Like, AI has been doing well. Quantum computing has been doing well. Crypto was doing well. I mean, none of these things are doing well exactly right now, but they have been in the past, right? So that's an example of a general theme. So I don't really trade sectors. I don't really trade like industries. I trade themes, things that have correlation, that have shown to move together in the past. And I do that by like obviously grouping them and watching them. And I have software to kind of put the charts together and see how they react to each other. So when I know something's in a group that runs together, and they have like a strong correlation, when the group starts to get stronger, one of the stocks start to take off, and then the other one comes up with, let's say it has earnings and earnings performs very well. I tend to, like I said, I'll put that risk on, at 1 to 2% risk, and then I'll let it ride out, kind of like you said with your trend strategy, right? With crypto, to some signal tells me this is not a hot theme anymore. I talk about this a lot on my YouTube. This is one of my most profitable strategies. In 2023, it made me a ton of money. 2025 has made me a ton of money. 2024, it did not perform well, but 2024, I started trading like more day trades with small cap gappers that have a certain universe. Pretty much the stocks are docile, and then they see large, I'm talking, in pre-market, they're trading 10 to 20 times the amount of average volume that you're used to. And they're usually like dormant. And I kind of learned this strategy from Pradeep. If you ever watch some of his stuff, and he talked about this strategy, even though he talked about it in general, he didn't really have like any conditions, but he said the best EPs pretty much is also kind of where I guess Q Maggie claims he got his strategy from. He said that the best EPs are dormant and then they explode with news. So I started to look into this, and I noticed that small caps almost always fail when they're at a certain gap percent, right? They have a very high rate of failure at a certain gap percent. It's extremely high. Like you said, like 70%. I think when I did my testing around, my numbers around 65 throughout most years, right? But it's extremely high at a certain percent. And what I looked for was, what was the correlation between the ones that won? And I found something that performed very well. And it's a certain setup that I look for that's like a breakout pretty much during the middle of the day. And I day trade it to see if I can capitalize on the highs of the day, and like a daily trend following strategy that allows me to produce some type of outcome for it. And I really wanted to like automate this, but it's very hard because the system behind it of breakout trading patterns of charts and stuff like that makes it almost impossible to do. And I also don't think I want to systematically trade anymore, because I've seen how many times I made the discretionary call and it saved me tons of money. Now, speaking of that, discretionary calls for your strategy, I've seen you talk about this a couple of times on Twitter. What makes you go into your system and say, no, not today, I'm getting out of here? What is that kind of, I guess, mentality, or I call it situational awareness, that makes you say, no, I don't think this is going to go well. Let me try to change something up here. Let me make an audible. What is that like for you as someone who's automating a system and can be completely hands off?
So, as you said, themes are a very strong thing in small caps as well.
Very strong.
Just from sitting in front of the computer all day long, you just notice that, like, if it's for example, we just had a crypto treasury plays,
Mm-hmm.
and I
Yeah.
know all these companies from my past. I know that they are real companies that are investing big money into these small caps. And you see one and you see two that runs all day long, and you just don't feel comfortable anymore to just short it blindly and trust your systematic strategy on those names specifically. Now there is a caveat. You do have to know two things. One is that a lot of other scammy company will join the trend and do PRs that looks like they are legit, but they are
Yeah.
not really legit. A lot of it involves like not mentioning who is the backer or the funds
Yeah.
that join the company, and not mentioning how the stock structure is going to be, because it might be just a regular dilutive structure that they just PR'd, and it looks like a treasury play, but it's not. So in this type of situations, when I know, okay, it's a real company now, the news are actually good, it's a theme, past X stocks just went up with this news, I just don't feel comfortable shorting it. Now, even
Wow.
with those plays, when though things also change. At some point, the market just doesn't buy this news anymore, and it happened. So you also have to be aware of that as well. Like
Yeah.
at some point, this legit companies start to fail because maybe it's not that legit as people thought, or maybe the hype is gone. And at this point, you really want to stop dealing with your algo and just let it do its thing. Today, for example, we had the LPRX with a Zcash treasury that went to the roof, and I didn't take it, and I prevented like a MAXI, I believe, in the sticker. I just didn't take it.
Yeah.
Um, so this is one thing. Another thing is like watching a company that cure cancer, for example. Like they have a really good news. I'm not like
Yeah. Don't
I
short
don't
that up.
know enough. Yeah,
Yeah.
so I
Don't
don't
short that.
know enough about biotechs, and I really like I really don't know anything about biotechs. But when I see that a company is curing cancer now, and I don't know, it seems like a legit news. And then
Mm-hmm.
you see how it holds all day long, and it doesn't break the laws, which it should by now. And it creates this beautiful looking bull flag. I
Mm-hmm.
just cannot stay in this trade. I cannot stay
That's
with
exactly.
my original algo entry on this type of situation. And many times I will prevent a loss, and many times I will miss, and it would be a good idea to actually hold until end of day. It might even out. I don't really know, but you have to remember that even if you prevented 2 out of, let's say, 5, then you've done a good job, because every max loss is a huge loss in
Yeah.
comparisons to the ones that you would make money on.
Yeah. That you will
So
win.
it's also, you have a bias here. You have to, even if you are 20% preventing the max losses, I mean, if you are, you have a win rate of 20% of preventing the max losses
That's
manually,
huge.
then it's still a good trade, because you lose way more than you win.
I've talked about this a lot on my like YouTube channel and stuff like that. I lack execution, and one of the reasons why I lack execution is because I go back and forth a lot on, I might have a strong month being discretionary. I'm like I said, I love to take risks. I love to trade. Uh, and then another month I might stick to my system. The years that I've been doing really good this year. The years that I've been doing good, I'm usually like focused. I'm locked in. I'm like waking up on time. I'm eating right. I'm getting sleep. I'm going to the gym. I'm doing all these different things that kind of has my mind at a point where I can focus, and the emotional part of trading does not bother me. The mindset of losing does not affect my strategy. I know what the number says. I know what I should be doing. It's just hard to do it sometimes when the last 2 or 3 trades, it would have been a big trade if you didn't move your stop. Or if you just did something different and you can see it and you're like, okay, maybe I should deviate a little bit. But I do want to say this from what you just described about the small caps. I'm literally taking the opposite of everything you just described. So it's kind of funny that you're shorting it, and the stocks that you're like talking about, the ones that go big, is exactly what I'm aiming for in my system. I talked about this a lot. I look for clusters, and for those who don't know what a cluster is, and I mean, this might not be that self-explanatory. A cluster is like you get these conditions where you see this thing happen X amount of times in a row, like back to back on the same day. You might get 10 of these. You might get 20 of these. The next day you might get 5, 7, 8, 9, 10. And before that, you didn't have any of them working, right? So you get this condition in the small cap world, at least. And I've done strategies on this. I posted stuff about it on Humagis. There was a big mean reversion, I think in May 2023. The banks had died and they all had reverted. It was like over 100 of the regional banks had reverted. And if you paid attention to that when it happened, you'll notice that like cluster events happen in small cap world, cluster events happen that let you know something's changing in the midst of what's going on. So pretty much what I have for my strategy, I have like these volume conditions and all this stuff, blah, 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 that. And on the other side of that, the situational awareness of it, of what lets me know like it's a signal time to start taking these day trade setups, is exactly what you said. I look for that bull flag midday holding past like the first 30 minutes of the day. And I also look for the previous events of the day. Like you said, there's a lot of clusters. There's a lot of these stocks that's going on this type of news that's saying like, hey, this setup is ready to go, which is exactly when you on your discretionary side say, let me not short these. And that's exactly when I come in and say, let me long these. That's like exactly my strategy, which I thought was funny because it kind of shows that like when you actually do some type of testing, you can find a strategy doing that, but I think it's a lot harder. You talked about the discretion. How do you decide to turn off the system per se?
So I think the answer is very simple. If it's within what you saw in the past in terms of statistics, then you just don't shut it off. If the max drawdown is still the same, if, for example, you mentioned like if you have a 2 months red, then you start to wonder if you want to shut down the strategy. But if a year ago, for example, you had 2 straight red months, and let's say 5 years ago you had like 5 straight red months, and you still see in the backtest that the equity curve looks good, the annual return is what you're looking for, the max drawdown is what you're looking for, then there's zero reasons to shut down the strategy. So as long as it falls within your backtest, you can do all these Monte Carlo simulations and see different paths of how your stats looks like. And as long as it falls within that, there's zero reasons to shut down the strategy. And you're probably going to shut down the strategy at the worst time where it was a max drawdown, and from there it's going to shoot up. Just because this is how it works. If the strategy still works and you are in a max drawdown, you're probably going to see it start gaining from this point onwards. So that's that. I do sometimes shut down strategies if I find something that I believe is better and it's correlated. And there's a decision to be made if you want to stay with the old one or the new one.
Yeah.
And I will sometimes just switch. I've done this before. And for me, like the most important thing is if your max drawdown, your current drawdown is bigger than, let's say, 2x of your past max drawdown. And you can also see like in the curve that it start to lose its its edge. There's an edge
Yes, it's
decay.
slope.
Basically.
Yeah.
Yeah. Then you know, okay, maybe it's time to find another one.
Okay. That's actually a relatively simple answer. Have you seen like the debates about, this subject? This debates on this subject. You brought up Monte Carlo simulations, and I mean, there's all types of stuff. I mean, people use like the poker betting, different strategies, the betting size, to kind of maximize like when to turn it off or what it should be doing, if it's still optimal, if it's still efficient. There's a lot of debates around this subject, but you have that's probably the simplest answer I heard. 2x times your drawdown. If it's in range of what you've seen in the past, then keep it running. I guess how do you, so you talked about your personality. You're very cautious. You move in steps, right? So being rather cautious, how does that play on your mentality with, like, I guess, when you're running these strategies? I would think that you will be cautious about that and you will wonder when to turn it off. Or do you just have enough discipline to overcome that cautiousness and say, no, this is what the results show, I'm just leaving it? Does that ever like plague your mind, or does it ever bother you, or have you, I guess, like giving you like hard time sleeping at night of what you should be doing?
I think once I grew the account finally, once I had some traction in the account from the 30K to 110K, I had way more confidence to just leave it as it is. Even though the risk became way too big for me to take mentally, I still just leave it. There's no other option, basically.
Okay.
It's also a cautious thing to do, because if it's the right thing to do, there's just no other way.
Oh, okay. So like the caution actually kind of, it's like a double-edged sword here.
Yeah.
Gotcha. I didn't think about it like that. I only thought about it from the side of turning it off. See, and that's probably, I'm not that cautious, like I said. So I probably can't think in that manner. But yeah, I totally understand. That makes sense. So tell me a little bit about like your process. You talked about like how you automated strategies and how you back tested them, and how you go about it. I mean, I think you mentioned Excel a couple of times, staying out of the Excel sheet. Tell me about like this journey of testing a strategy, and how do you go about actually testing it? Like, what is some of the software, what is some of the general ideas, the mindset behind it, some of the metrics that you think is important, stuff like that.
Okay, so it used to be a lot harder. I used to need to like pull data from, if it's Spikeet, for example, for small caps, or if it's Polygon for all the rest of the market. It used to be quite tough. You needed to like pull everything with API, store it in a certain way, have some metadata for each instance. If you want, for example, the float, the market cap, the earnings per share, like everything had to be like, you had to make everything on your own. These days, I honestly just vibe code everything. I just go into my Cursor account and I pull the data. I just tell him, okay, I want this data. I want you to connect it to this data. I want to run like a backtest that does 1, 2, 3. I want to separate like the data into 2 bins and test on this one and then validate on the other one. It became very, very easy. I mean, when I have a new idea, it's, I don't know, sometimes 5 minutes to actually
Really?
go from an idea to a P&L curve.
Wow.
Yeah, it became very nice.
And who are you? What are you backtesting in? Yes, this is news to
Sorry?
me. I said, what are you backtesting in to do this?
I'm using like a vibe coding tool called Cursor,
Okay,
which
I'm
is
not
for
aware of this
everything.
one. Yeah,
Yeah,
I'm
it's an
not.
AI.
Wow, it's AI too?
Yeah, it's
I'm
an
gonna have to.
AI. It's like ChatGPT, but specifically for a code base. So it's an agent. It can run your code. It can debug your code. You just give him something to do, and it will do it until it's successful. There is a learning curve because it also do a lot of stupid things.
Yeah, like everything else. Yep.
But once you get it, it works. It's super fast.
Oh wow.
So it's a matter of like getting data access. It can be Spikeet, it can be something else. And
Mm-hmm.
once you have the data, you can just vibe code it in seconds.
Okay. Wow. I never heard of Vibecode. I had to check this out. I've been struggling to do backtests. I actually developed my own VBA code and made my own backtester with
Yeah.
all types of different scenarios and stuff like that about 2 years ago. I worked on it for about a year and a half. And then through the work of it, I was testing stuff, had other people jumping on different projects for me and stuff like that. Like I said, I mentioned I have a group. And I literally stopped working on a backtester because I found some stuff that was profitable and I was making money. I think my first profitable year was in 2022. And then 2023, I had a really strong year, but I just kind of blew it at the end. I kind of blew myself up. 2024, I don't know what I did. I don't remember. Maybe I was like 20-30%. And then this year I'm up a lot, but year's not over, right? I'm in a drawdown right now. And who knows how bad it gets from here on, but that's actually really cool. So before you got to vibe coding, what was you doing? Like for me, it was a very extensive process. It was expensive. It was hard. It was time consuming. It was annoying as hell. I mean, I think at one point I had bar charts. I had FMP. I had Spikeet. I had Polygon. I had EOD data. And yeah, I had a back test, and then I had like a coder that I was kind of help paying me to code in VBA. It was costing tons of money to really get that data out. What is your experience like? And is it something similar?
Exactly the same. Yeah. At some point, I hired someone to help me a bit, but it's exactly the same. It's having a lot of data sources, developing a tool that A, downloads everything, B,
Mm-hmm.
backtest everything.
Mm-hmm.
It takes a lot of time, a lot of effort, also some money. And it just changed. It just changed for like my old algo system. For DAS, I built with vibe coding. I did everything with AI. You do have to have some experience or understanding on how things work. My computer science degree actually helped me. Um, but the game changed. If you are ambitious enough, you can do everything super fast now.
I would definitely have to check that out. That's very interesting. Okay, sounds good. So you also had used Spikeet for a while. Um, with the data. You also mentioned Polygon and other stuff like that. What's like your experience with Spikeet?
In terms of what? How do I backtest
Just
it?
using the data, like was it helpful? Did you find it easier than anyone else? Like
Yeah.
what's your general experience with it? For me, for example, I can code, but I hate it. It's not something that I want to do. I learned coding through engineering, through school. I can use programs like MATLAB, Python. These were kind of the basic stuff we were taught. We were taught the basics, nothing too extraordinary, but I can set up like a library and set up a project in Python or whatever. If I have to, I can write myself a script if I have to. I don't want to. So, before this, I was, obviously getting help from people or doing it myself at times to get, basic data sets. So Spikeet was kind of like a game changer for me a little bit because the data was just kind of built on itself. And then, I don't really use the AI because I'm like a power user in Spikeet, or at least I was for multiple years. I haven't really been back testing too much as of late. I just kind of been running my system. But when I was using it, I was very familiar with it. I thought the coding was once you got used to it, it maybe took like 4 hours to get used to like the language in there. Relatively simple, but after that, it's pretty much, you can just build out a data set, and the program got a lot faster through the years. It used to be like you can build out a data set of like 5-10 years and like maybe 6 hours, but now it's like minutes. So, what is your general experience for that?
Yeah, so I actually love it. As you said, it simplifies the whole working with external APIs that I had to do before. And everything to do with small cups is super easy to just define the universe, get it in a click of a button, get all the intraday data. And I just like get all the intraday data of the universe that I'm interested in. Let's say if I want all gappers over 70%, that did this and that, like you get it in a click of a button,
Yep.
and I just download from there all the intraday data. And then I can use vibe coding to just run a backtest, a simple backtest on this data. So Spikeet basically got all the getting data and storing it and validating it. They got it pretty easy. So that's amazing. That's the
Yeah.
amazing thing about it.
Yeah. 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 I mean, I agree. Definitely helped me out a lot in the past. So, with the automation, past the back testing, what are the tools you use to automate? Like your trading. 'Cause you said you're full automated now. What are some of the tools that you use, and like how does the signals work? Do you have like a signal that says, "Hey, do you want to take this trade?" Or how does that exactly go about? Or is it just like no notifications, it just runs? Like how's that go for you?
So imagine I have a backtest, I have the backtest, and then I try to generate live signals with the exact same logic as the backtest. I'm generating live signals. I take live data and feed it with my historical data, like appending it all the time and running the computational process that generate the signals. And I get like, let's call it a notification. I get like my signal, and then I choose what to do with it. I take it and I connect it, for example, with us or with interactive brokers via API, and
Mm-hmm.
I take the trade. I got like a risk management component that knows like my account size, my risk
Yep.
tolerance, knows
Yep.
to notifies me over SMS or emails when something that doesn't supposed to happen. If I don't have a stop loss set, it will notify me. If my loss is a bit too big, stuff like that. So, and the tools are like, again, cursor, like to vibe code everything. I use a platform called Health Check just to notify me on things that doesn't supposed to happen. I use data for the backtesting in small caps. I use data from Spikeet, and then for the live feed, I use a Polygon and DAS itself to just know the quotes, the bid and ask, and know how to enter the trade specifically. And I think that's it. I run on an AWS server.
Mm-hmm.
I use Guacamole because I have a few servers for a
Yep.
few different strategies and accounts. So I
Yep.
use Guacamole to connect to all of them. I use OpenVPN for the security.
Okay, that's something we
That's
don't
it.
have. Yeah. We don't we're in a process. We can actually right now automate our trades to IKBR. Um and then we also have something with Kraken, and I forgot the other crypto, because one guy's in a place where he can't get, I don't know, the Kraken won't let him use, he just, for whatever reason, he can't set up an account through Kraken in the state that he's
Yeah, it
in.
happens. Yeah.
Yeah, so we have to find another one, but I don't know, remember what it was. But we have a trend following strategy that we're trying to get fully up and running. We have some bugs to get through, but yeah, so we have something running for Kraken. We also have something with another broker to kind of run. What was the strategy? I forgot. I actually forgot what the strategy was. They're both non-functional right now. I wish we had, everything that's going on, which leads me to my next question. How long did it take you to get that stuff, man? That's a lot of work, especially if you did it on your own. So hearing that you have all that, man, that's amazing. So how long, like what was the process like to get all that stuff running? Was it easy? Was it hard? Was it 10 years, 5 years? And when did the journey start? You you talked about trading in general systematically. Did you always know you wanted to automate?
Um, I needed to automate at some point, just because like you have kids now. I have kids now. I spent like many years like watching the screen from the moment they came from the kindergarten to when they went to sleep, because in Israel it's like the hours is for the US stock market is exactly when they come back home,
Okay.
and then you basically don't see them until they go to sleep. And at some point it became crucial. It was like, okay, I'm systematic. I do things that can easily be automated. There's zero reasons why not to do it. And I had a developer that it took him like way, way, way too long to actually do something that works. And then Cursor came out, and all this vibe coding thing came out. And from the second it was introduced to me, it took me 3 weeks to go from having nothing to a full operational trading bot in DAS.
Wow.
And then I have, like, for example, for options, I use Option Omega for backtesting, which is already built, and I don't have to spend any time building it. And I use a trade automation toolbox for the automation. So it's already built. It's off the shelf. I can use it. And all these health checks and stuff like that, I don't know. I guess computer science experience helped me, and some coding experience helped me. So it was kind of easy to set everything up. So once you have AI agents that do things for you and you know how to guide them of exactly what to do, then the process is very, very fast.
Yeah. Yeah.
It's literally a game changer.
Yeah. And you've been in the field for a long time with the systematic stuff. I don't know how long this has been popular for, like, the individual versus, obviously you have like your brokers or quants or funds that's releasing their algos into the market. But for individuals, I don't know how long this has been exactly popular. It's still not exactly popular today. We are still very niche amongst the individual traders or commercial traders, right? So with that, one thing I have loved, and I've been developing tools, and it's been a painful journey. I've been developing tools to help myself for like 5 years now. No, definitely not. I've been doing it since like 2022. So about 3 years now, I've been developing tools, right? Talk to me about the tech, over the years and how it's become helpful. I believe tech, and I don't know why we don't have more stuff. I'm just learning about this cruiser and vibe check that you're talking about. I'm just learning about it, but like these things are like crucial to me. And the only reason why I ever even touched and worked into the development field in the first place is because I couldn't find what I needed, or what I needed wasn't flexible enough in the first place. Right. Those were the reasons why I would go out my way. I don't want to be a developer. I want to trade. I want to trade. I want to test. That's what I am. I'm an engineer and I'm a stock trader. I want to trade. I want to test stuff. I want to data manipulate, find reportings, find correlations. I don't want to do none of the coding stuff. I don't like any of that stuff. But it seems like we don't have enough tech in the field, and definitely not when I started, 4 or 5 years trading ago. We definitely didn't have enough tech in the field. I see more stuff being developed, and I think it's amazing. I think it's going to change the game. I think it's going to kind of balance out the discretionary field. There's way more discretionary traders. And I think the entry point to all this stuff is, like I said, you got to spend X amount of hours. You have to learn how to code. You have to develop this stuff. So, these programs like Spikeet that has AI, or vibe code, or you said it's vibe code, right?
Yeah. Vibe coding is basically telling an AI agent to do the coding for you.
Yeah. So like these type of, technologies that's coming out, I think they're like very, very good for traders. Like, even if you're discretionary, you can easily, the fact you can easily test something just to see, like, if you want to know, like, oh, how many of the winners of this strategy, how many of the open versus the close was positive, you can just type this into vibe check and it can back test and then say had, higher average volume. It can figure something out like then, when you're trading whatever strategy you're looking at, you need to be looking at higher average volume. If 80% of those were the winners, they had average volume. Just easy correlations like this can be very impactful and powerful to your basic discretionary trading as well. So just, I spoke enough about it, honestly, but just tell me about like the technology, because you obviously been doing this longer than me. So just tell me about the technology as you've been going and how you found it impactful. And when did it really pick up? I want to know, like, when did it really pick up and become like useful?
The AI thing is, for me at least, it was the past, 6 months, maybe. The AI became very impactful in my trading. Before you had, for example, Spikeet was a big change in the market, because instead of maintaining my own small caps database and recording everything and having processes that run every day, I could just with one query get the data from Spikeet. Before it was a nightmare, honestly. It was like, let's say, I don't know, 2020 or 2019. I was sitting there and just writing code that no one know. Couldn't find anything that does the same as what I was doing back then. Just writing code that tries to backtest something and then output the charts with Python. It was a nightmare back then.
Yeah.
And it also wasn't. It was a big part of me not being able to actually create successful strategies, because I had many bugs and it took me time to figure it out. It took me time to know, for example, that I'm picking into the future. It was tough. It was way tougher than it is right now, for sure.
Yeah, for sure. Yeah, I think I think some people still think it's the same as the past, or a lot of people act like it's impossible to do back testing and you have to, put all this time into it, right? Even like grabbing data sets. I see people complain about that, or just grabbing charts. And I'm like, well, I mean, they have programs like Spikeet. You can do that relatively easy. And even if you don't use Spikeet, there's other programs out there that can still do it, right? So I think all this stuff is super important for, people like us, but it's also just important for discretionary traders. I think, a lot of them need to, I guess, double check some of their stats. So speaking of, going into that, you talked about eroding imaginary edge. What does this mean to you, and what have you, I guess, gone to do this? Is this a reference to other people's edges? Is this a reference to what is this really about? I'm kind of interested, because I have a couple of stories of where I might have eroded someone's imaginary edge and got into some arguments and some discords with some backtest.
It's actually like a joke. I had some period of time where many people just gave me fire on leaking too much edge on Twitter. And I was like, it was a long time ago, and I was like, guys, look at my my Kinfo. Everything is out there. Like, I'm not making any money. I'm making, like, I don't know. I was at let's say 20K back then profit. I'm not making money. Like, what edge do you guys think I have? So it was just a reference, like, for eroding imaginary edges. Like, I'm eroding something that is not even there. So what are you guys so scared of?
Yeah. And that's actually interesting. Kinfo has been becoming more popular. I guess in the last maybe 2 or 3 years. I remember when it first started, he was very active in the Discord, going around asking people what they wanted, getting brokers into it. Like, my broker wasn't even in it at first, and they've done a very good job of expanding and branding, right? So what will make you want to, I guess, sign up for a service like that and show people like what's really going on behind the curtain? Like, what's the mentality behind that? Is it just like, is it an ego thing? Is it just like you want to show people that you're making money? You just want to be verified. You want to show people that, this quant stuff works. what's the mentality behind it? Because I find a lot of traders usually avoid this type of transparency.
Yeah, to me, if you have any digital signature, if you are in Twitter, if you have a blog, if you have something, if you say something to the world, and we can get into why say something to the world, but if you are going to say something, you need to have some transparency for people to take what you say seriously. I couldn't stand like people acting like they know everything on Twitter, but you got no way to prove any track record. You cannot know if they are profitable, they are not profitable. How can you trust any advice someone gives you or any opinion someone have without having some kind of a track record? Now for me, many years like small caps was a side business. It was something nice that I've done. I didn't really care about it too much, and it wasn't really a problem for me to show like, here's my account, here's what I say, and I invite people to find flaws in my philosophy, flaws in the way I think. I invite rejections, and I can tell you that I grew tremendously from rejections and mistakes that other successful people found in my stuff and my philosophy. And it's just a good way to say, this is who I am, here are my results, and I invite everyone to just give me advice, rejections, for me to grow and for us to grow together.
Yeah. I always learned more from sharing my losses with people, and they would ask me questions like, well, why were you even in this trade? This doesn't even look like your strategy. And then when you review it, you would just think about what was going on. Like maybe it's a bad time in life, whatever, but a lot of this stuff comes for me. It always came down to just me being a gambler and just execution, discipline based type stuff. Right. So this is also what pushed me to become more systematic and want to automate. I didn't always want to automate because I love trading. Right. And I will always trade by hand personally, but I do want to automate some strategies in the background while I'm also scratching my itch to trade, because I actually just love trading in general, like just from a sport, I think about it as a performance sport. But yeah, these are things that I can definitely, I'm right there with you. I think one of the most toxic things in our community, well, maybe not the quant community, but it could be the quant community too. But I kind of left the community in general, not because I'm like weak minded or anything, because I used to argue people like down and show the stats, and it would give me ideas to backtest and stuff. And some people came out, they will find good correlations. Like I learned a lot from arguing with people, honestly, inside Discords, because I will always test the stuff they would say, and I'll always bring it back to the group. And I'll have people message me on the side like, hey man, that's great work. Or they'd be like, hey, you actually kind of messed up this test here because you have this inputted here. You overfitting here. You have too many signals. This is too complex. And I learned a lot of stuff, just over time, which will be a very good subject to talk about, but we're kind of going long here. But it'd be a very good subject to talk about, like all the overfitting and what you have really learned from, trying to implement these systems. But just in general, I learned a lot about just how to become a better trader from backtesting and arguing. But I left the community because I find a lot of people talk more than they work. And it's very, they will always expose their winners, never their losses. And it kind of gives you like this, even in like the quant world, it kind of gives you like this, gives you FOMO, right? Like it kind of pushes you to believe that you're not doing good, or you're not doing as good as other people, or maybe you suck at what you're doing, and kind of creates a little bit of doubt when you're seeing everyone talk about like all these winners. At least for me, so I decided to leave because I already knew, first of all, it wasn't really much to gain because I was going to backtest anything that anyone said anyways, and I was going to study and work rigorously to figure out different strategies to market and different correlations to what I was doing. So I found, very little reason to be inside the chats, except the rare few gems that you would get from people who say something interesting, and you will look at it and you'll say, hey, it might be something here. But outside of that, I found no reason to really be in here. So what is your experience with like Twitter? If you've been in Discord servers or anything like that, what has been like your experience inside these communities? Have they affected you? You know, how have they, you know, worked in your journey?
So I think being on Twitter and being on Discord is net positive, even by a big sum. I
Oh,
just
really?
I got the opportunity to bounce ideas with people that I could never reach out to in real world. People with real experience, a lot of market knowledge, and people that are very profitable and in a spot that I aspire to be at one day. I also love like the arguments. I don't take it as arguments. I don't really care. I take it as opportunities to learn.
Exactly.
Many times when someone says something, you can just look at it. You don't know him. You will probably never meet him in your life. You can just think, okay, is what he said, it's got something or not? Is the guy even profitable? Is he on Kinfo? Should I listen to him? And you think for yourself, and many times you will find golden nuggets with what people tell you. Many times it will just be maybe the guy is like very bitter and he's not making any money, but
Yeah.
what he said might bring something to your attention that
Yep.
might change something. And it happened to me as well many times.
Yeah.
So
Yeah.
I think it's a very good thing to put your things out there on Twitter. I think that being on Discords, on good Discords, like I was a part of a pretty good community that I got kicked out of due to edge leaking, supposedly.
Okay. Gotcha.
So that's where it came from. But I was in a very good community. I learned a lot, and right now I'm in a very good Discord. Like great guys, make a lot of money in short in small caps. Um, Learned a lot about different angles that I didn't know about. So overall, like being on Twitter, being on Discord, as long as you can be emotionally stable and you can take the toxic out and you can ignore the toxic and just concentrate on the good things, I think it's a very good thing. But if it influences you to a point where you get depressed, you get influenced easily by what people have to say about you, then first of all, you need to work on yourself to become more stable. And after you do it, you can join and be there again. Because again, I think it's a net positive.
Okay. Yeah, it definitely was a net positive for me. At least I believe to some point. I never joined like a quant community or systematic trading community personally. I definitely have my connections on Discord. I started, you know, a couple of my own different groups. And I think that's really, it sounded like you have something, maybe you didn't start your own groups, but you have like something similar where you join something that's more focused. So yeah, I agree. I agree. So, you know, for anyone that's kind of getting into this space, what do you have to say? You know, what would like be your, I guess, your recommendations? I mean, I'm trying to get the device for me personally too. I want to get fully automated. I'm definitely going to take a look at vibe coding. So
Yeah. So I guess the most important advice is that you really have to be in trading and not in the Excel. Um, do your research, but do it quick and move to live testing as soon as possible within a day. Like just very small amounts, but don't waste a lot of time researching and combining strategies and looking for uncorrelated strategies and bumping the annual returns. Like I wasted so much time on doing this on strategies that had a flaw in their base and they didn't really made any sense. And if I just would live test it the day after I found it, I would immediately stop wasting any time on it because I would see that okay, there's a bug. Like I picked into the future, or I assumed something that I cannot assume, or I don't know. I went too far on my Python list and got data from the last data instead of the first one as I expected. Like, so many things can happen when you are in your lab and doing Python and trying to analyze data. The most important thing is to actually take the trade, see if the signal makes sense, and take it from there, and then waste your time on this strategy, and not the other way around. Don't have research analysis paralysis. And have your basics, like know what's overfitting, how to avoid it, where to get good data from, how to get it fast. Spend time on vibe coding. This is the biggest game changer I have ever seen. I'm sure it's like this in every other industry, but in our industry specifically, it's crazy the things I can do in 5 minutes now. It's really like it's a game changer. Just do it. Just learn vibe coding.
Okay. All right. Well, that's going to wrap up our first episode, man. I really appreciate you coming on. I feel like we had a lot of good conversations. Maybe one day we'll bring you back to talk more about the overfitting experiences. I'm sure we can go hours on that. I got tons and tons of examples of me personally doing that. So it's definitely something that I think is a good piece of advice. Before you go, do you want to, give a shout outs to your social medias, and then real quick, do you have anyone else that you think would be, good for this platform to just have a conversation with and get their stories behind their data? Anyone on Twitter, anyone in your Discords that you think will be able to provide, a really good conversation?
Okay, so my Twitter handle is Hacker Trader, and I have a Substack, which is stonks.capital. And in terms of having other guys, I have a lot of guys. Most of them are super secretive, and I'm not sure I've ever seen their face. I only see their avatar on Discord or something.
Yeah.
I can try to get someone if someone interested. I got many guys that make a lot of money and have a lot to say, I'm sure, but most of the guys in this field are pretty secretive and doesn't really want to share or expose themselves.
Yeah. Yeah. Edge leaking, as you said, it's a real, I think it's a real thing. Before you go, I would love to get your thoughts on that. Do you think that a bunch of people focusing or trading the same strategy or permutations of the strategy, do you think that erodes it?
Yeah, for sure. For sure it will erode it.
Yeah.
It will be it creates competition on locates, on your entry. You get worse entries, you get higher slippages on the stop loss. Could it expire a strategy 100%? I don't know. Like, I specifically don't think I have the influence to influence a strategy that much as some people gave me. But I think if enough people see the same thing and doing the same thing, for sure, there's competition on the execution and on the stop losses, and of course, some of the edge is going to decay.
Okay. Makes sense. I agree 100% with that. I think we've seen that with a couple of people's strategies in real time, even discretionary. So I would agree with that. But all right.
I would say that many times edge decay is confused with overfitting, for sure.
Yeah.
I mean, things just don't work out because they were overfitted. It's not an edge decay. It's just a poor analysis of a strategy.
Yeah, definitely. That's why it's the science behind data testing. It's a field that makes a ton of money for a reason. That's all I can really say about it. So, but yeah, man, I appreciate you. Great talk. I would love to talk to you, off camera sometime about more stuff. Sounds like I'm taking the opposite end of your trades, or you're taking the opposite end of my trades. I would love to talk more about it at some time. So, but for this episode, I think we got enough for the people. I hope they enjoy it. I hope they learn. I hope they can stick around. I hope we made this interesting for you guys, and I'm sure we'll have you back at some time. And definitely give him a follow at Hacker Trader. You can also check him out on Kinfo. He's legit. I think they had you ranked about 201 right now out of all the traders on there. So
I don't know. I don't really look at it. It's
I know. When I was doing my research, I looked at it. I thought it was pretty cool. I like what they're doing over there to really legitify people and kind of stop the furus, as you were kind of mentioning. Like, I guess we got to outro this. But yeah, I mean, good stuff. I appreciate the talk, and I wish you the best. No, one last question. One last question. See, I love this stuff too much, man. I love it too much. Do you believe in the market gods?
No. I believe that I do believe that once people get braggy, it usually means that the strategy worked for a lot of time now, and other people notice that as well, and they will join, and there is going to be a natural drawdown, nothing we haven't seen in the past. And it's just how the markets goes. When something is working, when something is hot, a lot of people are going to join. Mm-hmm. It's going to create competition. It's going to not work. There's going to be a drawdown. All the new guys will get kicked out of the game, and you will have your room again to make money. So bragging just means there's probably going to be a pullback in your strategy, but it doesn't mean there's a market god that watches you and will get you down now.
Okay, gotcha. Okay, nice. I think that's a good question to end it on. All right, peace out, YouTube. Peace out, Spike Nation. We're gonna wrap up. Tune in every single week. We should be dropping this weekly on Mondays. About 1 hour, 2 hour episodes, really focusing on the quant, the systematic stuff that you guys, want to hear about, you want to learn about the stories behind the data. And, we're just trying to provide some good, content for quant related topics. So tune in. Peace.